Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. The markets are going wild, particularly in China. I'm going to show you exactly what's happening. The first thing I want to look at is the stock market itself. I'll show you all the little technical details about that. And the second thing is the financial mess. There are many nuances that I would like to discuss. I want to bring it to you as quick and concise as I possibly can. Let's begin. Here you're looking at the Hang Seng Tech Index, 1-day percentage change. Can you believe it? Down 11%. We've got serious drawdowns that are taking place in the market. Let me show you. I'm recording this right now as the market is live. Now you could look at this just above my head right here. This is the market right now, specifically the Golden Dragon China Index tech stocks, and you're seeing that at around 51.81 at the time of this recording. That number probably doesn't mean much to you, but look at where it was in mid-February. It's almost 9,000. Almost 9,000 to almost 5,000 in a month, in 1 month. This is what I'm talking about. Except for 1 day, it's been red every single day for a month. What about Hang Seng? You could look at it yourself. Just look at that red. I mean, it is unbelievable. And on the current day, showing, I mean, this is excessively bearish when you look at that candle. Unbelievable. And again, peaking out, somewhere around mid-February in this, but I can go way back and I could show you. It is just bearish all along. Now, what's happening here? Well, there are many factors at play. But the newest piece of information, which I covered in a separate video, if you haven't seen it already, hit that thumbs up button, because then the algorithm will be more likely to notify you about that. But here you can see, going back 1 year ago, actually mid-February 2021, this particular market, the Hang Seng, is at 31,000. Right now, 18,000 and change. What's happening here? The market is declining significantly. And it's, of course, in the short period of time, it's taken a hit. But if you bring it back, it's hit real hard. And people say that, no, the markets are going to, if they go down by 10%, if they go down by 20%, then the central banks will just come in and print money. When the market goes down by 50% and they haven't done what they did back in 2020, what do you think? Now, what's happening here? What's going on? This is just showing you the China Enterprise Index, same situation, okay? They're all getting hit real hard. This is the Golden Dragon right here as well. Massive. 30% in 2 days. 30% in 2 days. Did anybody think that this would, maybe they went in, they bought the dip. Oh, and it went down again. What's going on? Well, there are many factors, like I said, but one that needs to be understood is that 51 million people in China right now have just been put under lockdown. Are we heading into the same situation that we saw before? I covered that more extensively in the other video, okay? Here you can see the property developer junk bonds, including Country Garden, which is one that I talked about previously. They continue to worsen. It continues to be more worthless. Their bonds are going down the drain. Tencent faces possible record fine for anti-money laundering violations. Another company, just one after the other. Alibaba, Tencent got hit a couple times already. The tech sector in China right now seems uninvestable. Really, when you think about it, it's just one after the other, after the other, after the other. It's real crazy. And I think part of it has been to be kind of push everybody down. Oh, you made a lot of money? Let's bring you back down to earth. All the gains right here that we've had from 2020, all that growth in many different ways, if you start to measure it, it's disappearing. All of that. Margin debt as a percentage of the DPI, disposable personal income. Just look at this. Here you can see I mean, it gives you an idea of what's been happening. People, they've been relying on cheap debt. Very cheap debt. You're going to see stock markets increase. But what happens when that changes? Margin debt is a percentage of real disposable income, real disposable personal income. And you could see as well, S&P 500 escalating dramatically, margin debt escalating as well. I worry about this, of course, because on the way up, it can exaggerate things. On the way down, it exaggerates even more. The MOVE index basically showing us the volatility in the bond market going to we saw that March 2020 timeframe. We saw that back during the financial crisis. And only a couple times have we seen that over the last few decades to the degree we're looking at today. This happens to be the Euro Stoxx 50 Volatility Index. Same thing's going on in Europe. Europe feeling it, that's for sure. And you look at kind of those extremes, with ARK being one of the extremes. ARK Index, they have their different ETFs. But what happens here when you really go into one strategy that works really well? Well, you saw 2020 and on, Cathie Wood was being interviewed everywhere. She's still being interviewed, but it's, they're shining a different light on her. And so you see the anti-ARK ETF trading above Cathie Wood's flagship fund. Isn't that weird? Isn't that funny? Taking the opposite bet seeming to be working real well. And then, last but not least, I wanted to show you the fact that even Apple has fallen below its 200-day moving average. This is big. It's big because you're talking about the biggest company in the world. They can do no harm. When the market started to fall, Apple went up because they said Apple can't lose. I remember that. There was literally articles being written about it on CNBC and Bloomberg. But here we are below the 200-day moving average. Now that's usually a strong indication of a buy. Here you can see that just in this case here, 2021 bouncing off a couple times off that 200-day moving average. Doesn't usually get that far, but there we are breaking right through. Paul Tudor Jones, one of the most successful and I find not too popular investors, uses the 200-day moving average as that indicator. That's the light bulb. Oh, we're below the 200-day moving average. Now we start to look for opportunities to buy. Because generally when we fall below, that's the best. So they save up cash, and they deploy. Not necessarily when it falls through, but that's when they start getting ready. It might, fall 50% from here, who knows? But they get ready at this point here. They don't buy the dip when it's down 5%. Those extremely wealthy people, the Warren Buffetts, Templeton, all these really famous investors, they usually don't, they buy here and there, but when they buy big, it's when we have these big drawdowns. Anyway, I hope you appreciate this information. I'm just trying to, shine some light onto what's happening right here in the markets. Understand that we have been declining for several months. The breadth has looked terrible. There was only a couple stocks that were really keeping it going there at the end, but now we seem to be falling through the floor. What's happening here? We've got the Federal Reserve meeting. That's so key. Oh my goodness. It's coming up at the time you're watching this video. It's probably going to, tomorrow actually. So you're going to get that information. Are they going to increase by 25 basis points, 50 basis points, or none at all? We will see. The Federal Reserve has also stopped pumping money into the system on their balance sheet. You can confirm this by typing into a search engine, Fed H41. You get that data for yourself and you could see. Okay, that's it for this video. If you appreciate the information, hit that thumbs up button. When you do that one little thing, it helps to support this channel. Are you subscribed yet? Oh my goodness. I got to sit down. No, I'm kidding. You got to subscribe to the channel. I'm bringing out new information every single day. So I want to thank you for that. Take care. See you in the next one.